You know, what's really interesting and fun is USDA is, we call it a Govy loan. USDA, FHA, VA, those are the government loans, low down for first-time home buyers. Their rates are usually at least a quarter point below the regular conforming rate. So if you had 20% down and you were going to buy this as a primary and did a regular loan, your rate would not really be the lowest. It would be one of the Govy loans. And so as an example, I'm going to do a USDA at 2.875% today, Gary, because that's what a real rate would be today.
Okay.
The mortgage portion alone is going to be, and I'm doing the full 379. Did you say 379?
Yes, 379. Say 380. Just let's offer $100 over list price.
Okay, just to be, yep, sounds good. 380. So you're coming in right under 1,600 a month for the mortgage.
1,600 a month.
Mm-hmm. Yep.
Okay. All right. Good.
And then you know, we would add the taxes and the association dues, but you can sorry about that. You can quickly see if you said someone's likely paying $2,000 right now for that. You can quickly see this is almost a break-even situation once you add taxes and the association dues and things.
Okay, good. All right, I'm going to share my screen again, and I'm going to show you the taxes so we can calculate that right now. This is a non-owner occupied property, so the taxes might be a little higher the first year. Let's just take a look here. And if we look at the current taxes on this property, it's going to pop up right here. Assessment and tax. Here we go. 2019. They're paying $21.26. If you're an owner occupant, it will adjust to an owner occupant rate. You get a $200,000 exemption on your property taxes. So your property taxes will go down substantially to probably about $400 a year. But right now, $21.26 is the current taxes. So let's just assume that you're going to pay the current taxes, because you are for the first year. $21.26, that's $177 a month in taxes. And then there's the maintenance fees. And if we go back to here, the maintenance fees are $417. So if we add the two numbers that I just gave you, the 417 and where's my calculator? There we go, 177. So plus 417, 177 plus 417. All right, so taxes and maintenance fees come to right around 600. So let's use 600, just under 600. All right, so I've got the numbers right here on this sheet. So a $375,000 loan, USDA 2.75 is $1,600 plus about $600 for taxes and maintenance fees. Your insurance is almost nothing. It's probably $25 a month. But if it were, let's say it's $480 a year, so we get 40 a month, all right? So now we've got $2,240 a month is your cost to own this place, and you're paying $2,000 a month in rent. Kelly, can you tell us how much interest expense would be affiliated with this property the first year based on those payments? Because what I'm going to do now is I'm going to show you your tax savings.
So interest in the first year would be $10,925.
All right, so just for round numbers, we'll use 11,000. $10,925 in interest expense. The property tax I just told you was, let's look at that again, $1,680.
Also, if I may interrupt, Gary,
Sure.
Once they purchase the property and they put in their homeowner's exemption form, their monthly property taxes will go down to $43 a month.
$43 a month.
Yes.
So this number right here is going to be $130 less a month after your property taxes adjust. Okay, so the tax write-off, so let's say that you made, I don't know, $70,000 last year and you're paying taxes at a 20% tax rate. What we do is we calculate how much are you paying in property taxes and interest expense. And so that comes to about, let's say $12,700. Okay. 12,700. And if you're in the 20% tax bracket, then that's how much you're going to save is 20% on what you're paying in taxes and interest. So 12,700, if we multiply that, 12,700 times 0.2, we're going to get your annual savings in taxes of 2540. And if you divide that by 12, your monthly savings in your income tax is about 200 a month, a little over 200 a month, 211. So we'll just say 200 a month savings per month. So you're paying 2240, but you're saving 200. So pretty simple math, 2240 minus 200, and that's your actual cost of owning that condo, 2040. So you can rent it for 2,000, you can own it for 2040. And then your taxes are gonna, or your taxes are gonna go down by, what did we say, Kelly? Like
$130.
Okay, so 130. So actually, the next year when your taxes go down, your payments, your cost for this condo is going to be more like 1,900. But next year, when you get that rental increase letter from your landlord, your rent's not going to be 2,000 anymore. It's more likely to be 2,100 or 2,150 or something like that. So over a very short period of time, your cost of owning this property won't be even $40 more than renting. It'll be less than renting. And it'll be that way for as long as you own this condo. And what I explain to people is take a look at this over the long haul. If you do this more than once and you trade up, then you're going to eventually have a nice house that you like. This is a great place to start, but maybe you don't want to live there the rest of your life. And so my point is everybody should be buying, not renting right now. The rents are astronomical and all we're doing is paying off the mortgage for the seller. Now, that would be nice if everybody bought, but then of course there would be no demand for rentals. So thankfully that's not going to happen because not everybody's on this call right now. But I just want you guys to understand how important, how this really works. I'm going to do another one now. I'm going to do a house because that's what we were looking at for my coffee lady. And it was pretty interesting. And so right now up in Makawao, I know of a listing that's really a good one. And it's not my listing, this one. And it's listed at about here it is. I think this is it. Yep, that's it, 629. So this is a nice little house. It's really close to downtown Makawao. As a matter of fact, you can just walk to right here is Baldwin Avenue. So, you know, that's cool. The house itself is in perfect condition. It needs nothing. It even has new siding, a new roof, a new septic system, all new paint, all new floors, all new cabinets, all new appliances from top to bottom. This house is brand new. She used an iPhone, it looks like, to take pictures. So that's good for us because the place didn't photograph as well as it would if she hired a professional. It's the vinyl plank flooring, which is a luxury vinyl plank. You got full-size washer dryer there. You got a pretty decent sized lot. It's a 6,400 square foot lot. It's not a really big house. It's 820 square feet, but you know, for a starter home with a 6,400 square foot lot and everything being brand new, really close to Makawao, not too bad. This one might rent for, I don't know, easily, I think $2,500 a month for a house, 3-bedroom house, really close to town in Makawao. So let's do that, Kelly. What is the mortgage payment on this one if we paid full price, say $630,000?
Okay, so shall we just stick with the USDA loan or?
Yeah, well, whatever the best, you know, the lowest cost is to the buyer.
So we'll stick with the USDA loan, but if any of you are interested and has a little bit of a nest egg, then you could consider a 3% or 5% down. But let's say you wanted to save that for new furniture. Zero down would be, and I put in the USDA funding fee on this one as well, $2,635, $2,635. That's a zero down loan.
35, okay. And if we look at the taxes on this one, because we want to take into consideration all the costs of owning a house versus renting. Of course, we're not going to consider electric and stuff because you pay that when you're renting too. Now you see here, their taxes in 2017, because it was owner occupied, were $481. So that's 40 bucks a month, but, or 40, what, about 40 bucks. Right now it's closer to, let's see, $200 a month, right? It's just under $2,400 a year. So if we figured $2,400 a year, that's $200 a month that they're paying in taxes. And you'll assume those new tax, that tax payment your first year. You don't have any maintenance fees, but there's insurance. The condo maintenance fees pays for insurance. You don't get insurance paid for when you buy a house. My insurance is about $1,800 a year. I have a 2,700 square foot house. So, I mean, why don't we just use that number? It's way higher. Mine's way higher than it's going to be for somebody else on this smaller house.
Gary, I'm
Yeah.
going to interrupt you just so we can do a little bit more accuracy. For a house this size, for both hurricane and hazard insurance, assuming it was built after 1974, you could get a really great policy for about 85 bucks a month.
85, okay. So let's use 100 just to be safe. So now the cost of this house is $2,935. All right. Now, can you calculate, Kelly, what the interest expense would be for the first year on this house?
It's going to be $18,112.
18,112. And then we're going to add the taxes, which are about 2,400 a year right now. So because the first year you are going to get that write-off for the full 2,400. The next year you won't get the write-off for 2,400. You only get the write-off for maybe 400 or 500. But still, that's 75% better than 2,400. Your numbers get better. Trust me. You may not have the tax write-off, but you're paying way less in taxes. So that's a good thing. So your total expenses are $20,500 that you can take off of your tax returns. And if we use the same, let's just use the same 20%. That's a pretty low tax rate between state and federal. Most people are above that, but let's just be safe and say 20%. So 20,500 times 20% is $4,100 a year in tax savings. And then if we divide that by 12, 4,100 divided by 12, we're going to save $341. Let's just say 340 for round numbers, savings per month in your income tax. And you can easily, if you're an employee, you can go to your employer and just raise the number of exemptions that the employer has on your, what do they call that? A W-9? I think that's what it is, a W-9. It's a form that you fill out and you tell them how many exemptions. Most of you out there are probably claiming like one exemption. You can claim 10 exemptions, and then the amount of taxes that they take out of your check goes way down, and it'll save you. You can save $340 a month in income tax if you're in the 20% tax bracket based on this particular scenario. So your cost is $2,935. This is the real cost of home ownership now on this house. It's $2,935 minus $340. And so the real cost is about $2,600 a month, right? Very similar to the condo situation. It's $100 more a month right now to own it than it is to rent it. A year from now, your taxes will go down, and your taxes will go down more than $100. And so then your cost to own this house will actually be less than it costs to rent it right now. And then when you get rid of that PMI, right, Kelly, how much of that payment would you say that, let's see, the payment was $2,635. How much of that is for PMI?
Yeah, so USDA has the lowest PMI, so it was 140.
Oh, it's 140, okay. So that'll bring your mortgage payment down to $2,500, okay, which is what it would rent for today. And then your taxes and tax savings is over $300, and your cost for taxes is going to be under $300 in the future. So the bottom line is, it's cheaper to own this house, a $630,000 house. It's cheaper to own that than it is to pay somebody $2,500 a month rent for a similar property. This is why I'm having such great success, folks, in making first-time home sales. In the last 10 days, I've put 4 new properties under contract. Let me think about this. One of the people owned a house in Missouri already, and they moved here and they bought a house. The other 3 are first-time home buyers. So right now, the first-time home buyers out there are when they meet me, they're learning this. The lady at the coffee house had no idea. She thought for sure she was going to continue to be a renter, but she was wrong, and I showed her. And so now she's super excited because they're going to own a home, and they're not going to be paying somebody else's mortgage. They're going to be paying their own mortgage, and then they get to paint the walls whatever color they want to do. They can do whatever they want to with the yard. You can do whatever you want to with the whole place. You don't have to worry about your landlord deciding to sell the property and now you got to move. You don't have to worry about your landlord raising your rent. There are just so many benefits of owning a home. My first home I bought was $115,000. I sold that back in 1987, and then I bought a house. My first one was a condo. Then I bought a house. It was $255,000. I was scared. I was so scared. $255,000 back in 1987. I sold that in 2001 for $520 and moved to Maui. I bought a house in Maui Meadows for $770,000 with the equity from the house that I had gained in Orange, California. And then 5 years later, I sold that house in Maui Meadows for $1.4 million, so almost double. And then I took that equity from my Maui Meadows house and I bought a much less expensive house because that was 2006. And I just had a feeling that we should reduce our overhead. So we bought a house for half the price in Ocean View Estates. We absolutely love the house. We paid $740 for it. And it's definitely worth more than $1 million today. So this is what happens, folks. Over the long haul, when you buy real estate, you'll be glad you did. I can't tell you what it's going to be like in a year from now or 2 years from now, but I can tell you that in the long haul, when you look back, my mom was a waitress. She bought a house with my dad for $29,500 back in 1965. She paid that house off in 30 years. She retired in that house. She lived in that house till the day she died. She only had to pay her taxes and her electric bill and her water bill and her gas bill. That was it, and buy food for the rest of her life. She had no mortgage payment, no rent payment. And then when she died, praise God, she deeded it to her kids. And so we sold that house for $650,000, from $29,500 to $600,000, $650,000. So folks, I don't know what else I can say except this. If you think that you are interested in something like this, there's no pressure. I am a pretty low key guy. I'm not going to pressure anybody to do any kind of a purchase that you're not comfortable with. My goal is to help you accomplish your goal. So if your goal is to get out from underneath somebody else's mortgage payment and set yourself free financially, this is the first step. This is the first step, guys. I took all my money out of the stock market. I had, a 401k, SEP IRA, and all that kind of stuff. I was saving for years, had my money in the stock market. I'd watch it go up and then I'd watch it go down. Then I'd watch it go up and then I'd watch it go down. And you know what? 20 years later, I was at the same place I started. And I said, this is stupid. So I sold all of this after the 20 years and I bought real estate. And as a result of doing that, now that real estate is providing me income and it's free and clear. And when I retire, I can sell that property to live on the money, or I can choose to downsize from this big house and sell this property and take all the cash from this property, because this will be free and clear in about 10 more years, this house that I'm living in now. And so I could sell this, take this cash and live on it for the rest of my life and go live in one of those condos that we have, right? So I just want to encourage everybody here that's listening. There's no better time. Now let me explain to you why there's no better time than right now. Kelly, how often do we see interest rates at this level?
Never.
Never. Right. In your career, how long have you been in the loan business, Kelly?
So I've been lending I make 20 years on June 1st.
20 years. Okay.
Hey.
Congratulations.
Two
You look so
decades.
young. You're only
Kind of
28. How did you do
kind of
that?
creepy thinking I'm that old. But yeah, so 20 years, and I'm a numbers person. That's my specialty. I like to cut numbers. I like to overanalyze them. And so when it comes to rates, I have every time the rates either swung up or swung down, I've associated my own, life experiences, memories, so I can never forget them. We've been kind of used to hearing for the last 4 years, oh, lowest ever, lowest ever. So it's kind of like America's Got Talent. It's the best season this year, and then next year it's, oh, this is the best, and you get
Right.
numb to it. But the reality is, right now, the base rate, and that's what I measure, the 30-year fixed base rate has never been below 3%.
Right.
And it was like that at the end of February, going into the beginning of March. They swung way up all through March and the beginning of April. The base rate went up to about 4%. And they're softening again. The Govy loans are now again below the 3% mark. Fannie Mae is kind of hovering between 3.25% and 3.5% for purchases.
Okay.
And obviously with the global economy shutdown and crisis with COVID-19, it's not been good news for the economy. And typically when it's not good news for the economy, it means good news for lower rates.
Right.
So this is definitely a perfect time.
Okay. So let's take a look at that $630,000 loan at 4%. How much would the mortgage payment be on it? $630,000 at 4% today.
Very good question. So let's see here. I've got my handy little mortgage calculator. So 640 for, did you say? Gary, the purchase price?
Oh, 630,000.
Oh, the same scenario. Got it.
Right.
So 630,000 purchase price, 4%. Yeah, the payment with nothing added yet would be $3,007.
3,007. That makes a big difference. That's $365 a month difference when the rate goes back to a more normal rate. When I got started in the real estate business, it was 1982. I just graduated from college, and adjustable rate mortgages were 13.5%. And that was low. Excuse me, and people were borrowing because that was low, 13.5%. It went up to 21% for the prime rate in 1981. I got started in 1982. I had no idea. I was a waiter. I was going to school and waiting on tables. I had no idea that interest rates were low or high. I just went to work and I made money. But now look at this. It's under 3%, and what a bummer that would be if it wasn't, because we probably wouldn't be having this seminar. It would not make sense like it does right now. This is the time. The other reason that it makes sense right now, folks, is because the sellers out there are a little bit more motivated today than they were 2 months ago. You can probably believe that. And so if their property is still on the market, 2 months ago, that $630,000 house, it would have multiple offers. It doesn't today. It's there. It's waiting for somebody who knows what I'm showing you right now. It doesn't make sense to not buy something like that. And so the sellers are negotiating. I'll give you a perfect example. I just put under contract this week an it was listed for 920,000. And then we dropped it to 899. Then we dropped it to 875. Then we dropped it to 859, I think. And then we got a contract for 850 just as COVID hit. We finally got a signed contract for 850. I was very happy about that, but this buyer never even put his deposit into escrow because COVID just hit and they got scared. And so they backed out. So what do? We listed the property for 829 after taking it off the market for about a month. The sellers actually refinanced just in case it didn't sell. So they refinanced and they got their interest rate down really low. And then we put it back on the market. And we put it on at 829, and it's in escrow now for 800, guys. We had it under contract 2 months ago for 850. So this is what the point that I'm making. There are very motivated sellers out there right now, and they are dropping their prices in order to get their property sold. Maybe they got to move to the mainland. We got one guy down the 2 streets from me. His house has been on the market for over a year. It's in escrow. It went into escrow during COVID. Now, do you think that maybe he said, this is enough? Because he wanted to get to the mainland and go be with his grandkids. He decided, if I keep waiting for my price, I'm never getting out of here. And my grandkids are going to grow up without me. So he was a very motivated person. And so I don't know what his price is yet because it's not closed. But I guarantee you it's substantially lower than his list price right now. And so because it was on the market for a year and it didn't sell. So what did he do? He had to lower his price in order to sell. So, and he probably lowered it much more than he would have previously because it was a seller's market just 2 months ago. It's a buyer's market right now. Now is the time for anybody who can afford to buy something to get in and take advantage of the situation. So I'm going to tell you what the process is now. What do you do next? All right. I've given you a couple of good reasons why. I mean, I've given you lots of good reasons, 35 minutes worth of good reasons why it makes sense to buy right now. The next step is, who do you think I'm going to refer you to? Yay. Yeah, Kelly got it. Kelly knows. So Kelly, why don't you tell everybody how they can get a hold of you? Because that's the first step, you guys. You just talk to Kelly and she'll tell you what you can do. And then when she tells you what you can do, then you call me. So Kelly, how do they get a hold of you?
Yeah, so I don't mind answering my cell phone, and we do a very easy process. I call it a phone interview. It's really
Right.
cool.
Mm-hmm.
And you can call me in the evenings, on the weekends, you know, as long as I'm not having dinner with my family, I don't mind picking up the call or calling you back quickly.
That's
And
true, folks, by the way. I know that.
I think we did a 9 o'clock call one evening and got a client into contract and closed quicker than we thought. But basically, you know, it's just painless. You just give me a call on my cell phone number. It's 808-870-8731.
Okay.
Give me a call and I'll just ask you a series of questions. And really what I'm doing in the phone interview is I am taking an application over the phone. And so the questions I'm asking are hitting the 5 criteria. Are you working? What is your estimated monthly income? What is your estimated monthly minimal debts? What do you have in the bank right now? And then what kind of property are you interested in? And that gives me enough information that my goal is that I leave the phone conversation with you and to give you an idea of where you're at. I don't want to say, okay, thanks for the information, call you in a couple weeks. I try to make sure that when we leave the phone interview, I have already run some numbers and planted some seeds in your head on what certain price points look like and are you ready? And so my goal number 1 is to see if you meet the 5 criteria and then leave you with, yes, it looks pretty good, or we might have to do a little bit more work until I can do that. So that's step number 1, super easy. I take the scary out of it. Step number 2 then is I'm going to follow up with that phone call with an email to you, and then I'll start to chase down the documents from you, because I do want to make sure that the documents sort of match up to the phone interview. And if they don't, we want to learn that early on so I can sort of tweak and readjust what our findings were based on now more factual documentation.
Okay.
And that's something that we can do together with your schedule, and we try to not do it too high pressure, and we work with you in grabbing the docs. And then lastly, you know, when you're ready to start making offers, you work with Gary and his team, and then we just send you pre-approval letters and you're off to the races.
Yep. Okay. Really good. So, Kelly, those of you that are watching, here's her number and her email address, so you can get a hold of her either way. Now, Kelly, we've done this several times where you've done the phone interview, right? You just send me a text message or an email and just say, Gary, John Smith qualifies for $650,000 USDA, right? So then John calls me, or I call him, whichever, and we talk about properties. And we'll do a Zoom meeting just like what we're doing right now. That'll be the next step, is after we have a number, then we know what we're shopping for. And so then we'll go online, we'll go to the internet, and just like I was just showing you those other listings, I will also show you what's available in your price range. And we'll go through every one of them. I just went through one guy yesterday. We did 28 properties on a Zoom call just like this. And we go through and we go, okay, you don't like that one, we delete it. Okay, you like that one? Okay, we'll save it. And so I had a certain number of listings that he liked when we were all done. And then I emailed all of those to him to share with his wife, and the two of them will go over them together. But what's nice about doing the Zoom meeting with me is that I know these properties already. I've been in them. And so I know the neighborhood. I know, like that one in Makawao, how close it is to town. I also know that one happens to be the best deal in Makawao or Pupulani or possibly Kula. It's probably the best deal in upcountry right now. And so, but that's changing all the time too. So when you call me tomorrow, there could be new listings on the MLS. And so that's what we're going to look at is, of course, what's available today. And we'll find out which ones you kind of like, or, you know, are possibilities. And then if you like, what we can do together is we can get in a car. I don't mind getting you in a car and driving you around. I mean, the last couple of deals that I did, I got people in my car before we even called the agents. We drove the neighborhoods just to make sure they liked the neighborhoods. And we looked at the property from the front and go, could you see yourself living in there? And if they look at it and they go, no, I don't like that car on Jack's next door over here. And I don't like the fact that the guy's changing his transmission in his front yard next door over there. And so we say, okay, this one's not a possibility. We'll just skip it. And so when we're done with our driving around, then we might have 3, 4, 5 properties that look good on paper. They look good from the street. And then we can call the agents and actually schedule appointments to get inside. So that's kind of the way that I've been doing it in this COVID environment right now. And that way we're disturbing the fewest number of people possible. And then we just show up with our masks. We put on a little bit of hand sanitizer before we walk in. The listing agent opens whatever we want to open, so we don't touch anything. And then we walk out of there and we get back in the car, and then we go to the next property. We haven't touched a thing. And so everybody stays safe. Frankly, I believe we are safe, but that is good to do that extra precaution and follow the law. And so that's what we're going to do. We're going to follow the law and do it the right way. So everybody comes home safe and healthy, and nobody gets sick, and then you get you've taken now your first step towards financial freedom. So I haven't seen, let me see here. I see that we have 11 participants in this call, and I want to thank all of you guys for coming today. And if any of you have any questions that you want to ask, you can ask them now. You just have to unmute your phone or unmute your computer. If you want to talk to me just privately instead of asking in front of everybody else, that's fine too. And so just so that you know how to get a hold of me, I'm going to do the same thing I did for Kelly, and I'm going to advertise my name and phone number as well. So again, my name is Gary Moores. My phone number is 808-891-8989. Easy one to remember. And my email is also an easy one to remember, but you might want to write it down. It's Gary@GM, which are my initials, Maui.com. Gary@GMMaui.com. So if you like what you saw today, you want to talk some more, I'd love to help any of you that wants to talk.
If I can, Gary, it looks like I've got a general question here on the text chat. It says, Kelly, what qualifications for USDA or FHA are needed?
That's a great question.
So, yeah, so if I can address that question.
You bet.
So for USDA, there are a couple specific qualifications that are required. The first one we mentioned is the home has to be in an area that is considered rural. And USDA, again, deems Kihei, Lahaina, Upcountry, and most of the top part of Wailuku eligible for this rural loan of 100% financing. That's the first thing. Is the property in an area that USDA lends on? So if you are looking for Central Kahului, that's right now the only place that's excluded from this.
Now, let me interrupt you 1 second, though. Central Kahului, you mean, oh, Central Kahului, but Wailuku is okay.
Wailuku right now above is okay, yeah.
Right.
Because Kahului kind of sprawls a little bit into Wailuku.
So part of Kahului is also USDA?
No, so Kahului, and then as it kind of sprawls into the beginning of Wailuku is not okay. And then most of the outer skirts of Wailuku on the hill, Wailuku Country Estates, that side is okay.
USDA, Wailuku Country Estates, well, we're talking a lot more money over there.
I know.
But, you know, downtown Wailuku, that kind of area?
So right now that's in the kind of saturated of the homes, not considered rural.
Okay. But
Yeah.
we did
So,
get down in Waikapu Gardens, that's USDA.
yep,
Everything off of Waiko Road and up in the hills over there is
yep,
good.
yep.
Keholani,
Yep. Yep.
good.
Kehalani's okay. Yep.
Brand new homes in Keholani.
Yeah. And so first is the area. Second is the person. USDA is meant for first-time home buyers, for people who are within an income limit that may not have the ability to have saved a lot of money. So for a household of 1 to 4 persons, estimated about 100 grand, 104 to be exact, your whole household income cannot exceed $104,000.
Okay.
And let's say only the husband wants to apply for the loan, but the wife is working. USDA will do their own qualifications different from the lender at the same time. And USDA will still consider the wife's income for purposes of qualifying for USDA, even though she's not on the loan. So we have to say household income, or if you have a grandmother or mother that you're taking care of and she's got Social Security income and not on the loan, we have to look at all household income. And so I will tell you, but then if you have more than 4 people, then that can go up to about 140,000. So depending on how many people you have in the home, they have income limits. So criteria number 2 is income limits. You have to kind of be under that to qualify for the 0 down.
Okay.
And the other thing is standard, 2-year history of your job or type of job. It doesn't have to be the same employer. We talked about the cash reserves. You need 2 months of the new monthly payment kind of sitting around, whether it's in savings, 401k, anything like that is okay.
Okay.
Credit, minimum credit scores used to be quite low, but they're a little bit more strict now. 620 is kind of the new minimum. I don't know if that's temporary for now and they'll kind of come back down. It used to be 580 mid credit score, but 620 is still very flexible. So those are the kind of the idea and qualifications needed.
Yeah. I do rentals for my clients and I very rarely see less than 620 credit score. So that still includes most people, I would say, right? Yeah. Especially since we've had such a good economy for so long. Yeah. Okay. I don't think that we have any other questions. Just a thank you, Kelly. I want to thank all of you for joining us today. Hopefully you'll be giving Kelly a call and then giving me a call. And if we can be of any service of any kind, even if it's just asking questions to buy sometime in the future too, you don't need to take action right away. I'm not, like I said, I'm a pretty low key guy and my goal is just to help you understand better, help you achieve your goal. I even tell my clients, I say, if your goal is to get out of my car and never see me again, then that's my goal. I don't want to push myself on anybody. All right. So thanks everybody for joining us today. It's been a pleasure and I look forward to hopefully being able to help you change your financial future. Aloha. Bye. Thanks, Cal.